Hey everyone, welcome to episode 2 of From the Ground Up, and we've got one you won't want to miss today. We've got Stu and Tom from Pure Property Finance, and they're experts in funding and delivering development projects.
Personally, I'm just super excited in trying to simplify the whole process, from finding sites to actually getting the site planning and then pushing that site through finance. I think there's a lot of misdemeanor over that whole process, and hopefully we'll have that cleared up today. So without further ado, let's bring Tom in and start the episode. With Landstack, what we saw as a natural progression is obviously a lot of people using Landstack are maybe using the pro version. PLCs have got their own sort of finances in tow, but actually now we've opened up Landstack Lite, very accessible to really anyone. We're seeing a real broad spectrum of people who are using it, from people who maybe have done one or two projects through using finance to people who have heard the word but have no idea really how that works. And I think the big thing we want to cover today is maybe a bit of a 101, dumbing it down, going, look, this is how it works. So people maybe can see that it's a lot more accessible than maybe what initially people
I think the key point we felt was that we kind of understood the land side of it. You know, that was the bit that we felt we had the expertise in. But then when it came to finance, brokerage and all that sort of stuff and all the different options, it really wasn't necessarily anything that we were experts in. So we got introduced to Pure Property, and we've obviously hit it off quite quickly with them. And they know all about that. That's what they do. They provide a brokerage service to help you find the best way of getting a deal funded, give you options. Although I shouldn't really explain that. We've got Tom from Pure today. Tom, do you want to maybe talk a little bit about what it is you kind of do, and then how that would tie in with what we're doing here at Landstack?
Yeah, of course. So we're, Tom from Pure Property Finance. In our role, we work with developers right across the country. We get involved with cost analysis. We help build out development appraisals, and really presentation to funders as well. We're there to essentially bridge the gap between a developer concept and the most appropriate financial strategy. So that's kind of where we sit in. After meeting you guys, the partnership made perfect sense. It just brought finance to the forefront of that concept we just mentioned. Historically, and it was always a final hurdle, finance. The developer concept doesn't become reality until you find that site, until you obtain planning. But really, we believe a planning application and a finance application should run alongside each other.
Yeah, absolutely.
From a momentum swing.
And I think hopefully what we're trying to do is pull that sort of finance question earlier in the process.
Absolutely.
So
I was going to ask that in terms of where you see most people coming to you. At what stage? Is it quite late in the stage of, they've got a site and they've done a lot of work, or is actually...
We get a blend. Typically, people are acquiring sites with planning permission in place.
Yeah, okay.
But those experienced developers that are sourcing land using tools like Landstack, as soon as the site is viable, we should be entering into conversations and forward planning with them. I mean, the finance package should help shape a project as well. Get that right, you can build.
And would that place restrictions on potentially what you could build? You could obviously, there's certain things that might be viable from a planning point of view, but then obviously there's the financial aspect. For example, like a unit mix, or potentially the type of thing you're building, or maybe even the volume. Actually maybe slightly more expensive homes versus less expensive homes. Is that something that you kind of get into a bit as well, or?
Yeah, we'll run cost analysis, the sensitivity analysis on GDVs, but we're a whole of market funding, and that ranges from bank, specific development finance, equity, private money. So there's a risk appetite for everyone out there.
Exactly. Yeah.
And it's not just the numbers game really. It's more the deliverability, reliability, and confidence around developers. Yeah.
One of the things that I think a lot of people don't necessarily appreciate is that obviously people think, I need money for this, I can go to a bank, but actually there's quite a lot of different sort of options for how you could fund a site. And I don't know if you want to maybe go into a little bit of that, because that's something from my point of view, I've got a bit of an idea, but it would be lovely to maybe, do you want to put a bit of a spectrum on it in terms of sort of your bog standard all the way through to maybe your slightly more esoteric?
Good question.
Big word as well.
Simple to whatever you want to say. I think the key thing is it's obviously it's not just you go to a bank, and if bank says no, then that you haven't got any other options. There are different things that you can look at, and it obviously depends on experience and all this sort of stuff. So sort of, if let's say the classic question I think we'll get is, we've got a Landstack user, they've got a piece of land that either they control or they know the person who owns it, or for whatever reason, and they think it's really got good potential. Maybe they've done a couple projects before, but they've never done a new build. And they came to you and they said, look, I've never really tried to go for finance before. What would you say? What would the process be for that? Like, what sort of things would you look at?
So we touch on the different areas of funding you can obtain. So high street banks will have a certain risk pinch point. Private funds and development funds they'll be a bit slacker. Leverage points as well. So all these different options will lend itself to the correct site, the correct developer. It's just engaging with the correct people. Yeah, I guess that's, yeah.
And it's so much a bit about like who you know versus necessarily what you know as well. And obviously the beauty of what you guys bring to the table is you've got the contacts. So you'll see a site and you'll know, oh, this would be perfect for X or Y. Whereas obviously the person who's got the piece of land wouldn't be able to put that sort of stuff together. So that's the advantage that you bring. Is
contacts, being able to present risk to a funder, manage risk. That's where our kind of expertise comes into play, yeah.
I was going to just talk a little bit about the early stages of understanding constraints and planning and those bits. How much do you take into account when you're looking at a site that comes through? Because I think the beauty of this is obviously you're probably going to have a lot of knowledge from the outset when the site comes through, and hopefully the user's done a little bit of due diligence on the site. But how much do you take into account sort of planning constraints and actually what's going on in the local area, values and those sorts of things when you're actually reviewing these sites? Like, do you do quite a lot of due diligence when the site comes through to you, or the person comes through?
Pre-planning approval.
Well, this is just kind of going for finance and pre-approval as well.
Yeah.
Like, how many sites are pre-approval and how many sites are sites that have got planning in terms of the mix?
Brand new clients are typically looking at acquiring sites with planning in place. Yeah.
Okay, got
so that's less of a concern for us, but when we're working alongside repeat clients, people that are using your sites, we'll get in early around the varied constraints, what they need to do to get planning, how that might affect what scheme they're going for, and the impact that'll have on gross development value as well.
Got you, because I think I see, especially with this, quite I think might be hopefully an increase in people looking the pre-planning part of it, because it's all well and good, sites with planning, but I think few and far between. A lot of people in this day and age trying to source off-market opportunities. So especially from our angle, I think where we're seeing a lot of people coming to us, they're saying, look, we are trying to source off-market opportunities, maybe sites with no planning. But that could be anything from, 1 to 2 plots to larger. And I think hopefully this will kind of stimulate people going early and going, actually, we've got this site, it's bare land, but we think it has potential. Okay, who do we need to talk to about potentially trying to look at finance and actually trying to fund this project to get off the ground?
And it's that point as well. The earlier we can be involved in that, the finance can form part of the strategy and what scheme they intend to build, the cost analysis around that, whether that fits in with lending parameters, both loan to costs and your loan to GDV.
Yeah.
What would you say, are sort of the big red flags that would be big red flags to you if someone came to you with a piece of land and they said, oh, look, I want to discuss funding options? Do you have some sort of initial questions that you'd want to get answers to just to understand whether it's worth a conversation or not? What do people need to get in a row organised before they even think about finance?
I mean, what you might want commercial, what might you deem commercially viable on a site might be one point, but if that's in situ with the rest of the region, or is it really viable to sit there? I think but any sort of pre-planning discussions is really important. Any pre-planning feedback for us is good to go off.
So for the most part, what I think the way that you would envision most of these deals happening is you might have an initial conversation where you'd have a discussion about GDV, about what the sort of rough viability of the site would be, but then the task would be, right, you need to go away and get planning. And then at that point, once you've got planning, you can then that's a much easier thing to then get funding for. Is that kind of what you're saying?
Yeah. So most development funding, you'd require full planning permission in place. But what we would want to do is run that finance application alongside the planning. We can model it with different schemes as well.
Fine.
But they shouldn't happen one after another.
Yeah, I get
They should run in conjunction alongside each other.
So you have that maybe initial conversation. Here's what we want to apply for. Here's what we want to go for.
Yeah.
Okay, that we're going to put that application in. So let's apply for the funding for that.
Mm-hmm.
And then I assume if basically there's a condition where as long as you get granted, then the funding comes through on the basis of all those things. To what extent would sort of like conditions and things on the planning application affect that? So you get the planning and it gets granted, but there's condition A, B, or C on the application. Do any of those ever kind of kill deals or anything like that? Do you see much of that?
Well, depending on the condition itself, but that can be built in, and some parts of the funding can be held back until conditions have been satisfied.
Yeah, fine, okay.
But we can structure deals around reasonable conditions. Yeah.
Okay.
And
explore options.
Honestly, like I'm trying to think of it from someone who doesn't know much, right? And there
think
will be
I'm
them on Landstack, and
Well,
they will want to be going. Well, it's me as well. They will want to be going, clicking on a site, right? Oh, this is interesting. I wonder what finance stuff I can get there. Oh, get funding. I'll click that, get through. Hi, mate. Like, do you have planning? No.
Yeah.
Do you know what I mean? So there might well be quite a few of those that there'll be a conversation about. Right. Well, here's what you want to do, and that's kind of what we're trying to get across here, and what will go across well, I think, on social media for people is like, okay, well, actually. Yeah. When can you get funding? What do you need? So why is it that maybe we should ask a bit of a question about why do you need planning for funding? What does it give you? Obviously, the logical answer is because that's what you're actually getting funding to build, so you need permission for it.
Yeah.
But are there any sort of people that would potentially say, looking at the site, actually, we'll give you a bit of funding to get the planning, from a sort of more promotion point of view?
Yes, we're more restricted.
Yeah.
We can absolutely get funding on sites without planning.
Yeah, okay.
You'll then need to refinance to deliver the site with an actual development funder. So we've got some land finance products and funders to do it, but they often won't blend into the next.
What's the typical type of site, so planning application that people are... So they've done all the planning, so they've spent some money getting the planning.
Yeah.
And have they spent their own money getting the planning application?
Yes, typically, yeah. They won't have funding in place for that.
Fine.
Yeah.
Okay, and then they're going.
We could leverage other sites or other assets for that, and we have done that. But on that,
so they put the time, money aside to go, right, I'm going to get planning for this, I don't know, 2-unit site.
Yeah.
They then go, right, now I need to actually build this site out and do the planning. They're coming to you to go, actually, Tom, can you help with financing this site so I can just get it moving? Is that kind of where?
Yeah.
Okay.
Because I suppose then it takes the speculation out of it, right? You've got permission. You can put your spade in the ground. You can start doing it. As long as you're then saying, can this person product manage? Have they delivered projects before?
Yeah.
But if you've got all that in place, you've got planning permission, then it's a mathematical question, right?
Yeah,
How
there's
much
some
the build
certainty
costs?
about what the project looks like, what the developer's lending against, what the future value is
potentially going to be.
Yeah.
I'd love to know what you do from a future value point of view. Obviously, we've got a load of comparable data on Landstack and so on, which can kind of give you an indication as to what is happening now.
Yeah.
What generally would you say is a good approach, potentially for sort of like margins and things like that? What generally speaking you look like? Do you have a general rough idea about percentages, costs that someone should think in their head to see whether a deal is good or not? If that makes sense. So like your build costs is however much percentage-wise of your overall sale GDV. Does that make sense?
Yeah, I mean, going back years, it probably didn't lend itself now since costs have increased, but the old a third rule, if you're somewhere around your land values a third, your build costs are a third, and your developer profits a third before finance costs, you're off to a winner there. Most development lenders would require a dev appraisal to show 25% developer profit before finance costs.
Yeah.
And you can factor back, and then there's a bit of leverage there.
And would you say that that's something that, like, obviously historically was pretty classic, and then has that been squeezed a bit more recently?
Big time. Developers, since COVID, the cost of labour, cost of materials is skyrocketed.
It's going high.
Yeah, so there's, and I think going back to what I said earlier, the misconception around lenders isn't just a calculation. It's not a computer says no. So if you don't quite meet the parameters, they're more concerned about reliability, developer experience, liquidity in the area. And if you can paint and present a sensible risk strategy to a lender, they will go outside of lending parameters for the right project and developer.
I think that's a really good point made in terms of the key thing is to talk to you guys. It's not okay, ping a site through and you'll get a no or a yes back. It's actually pick up the phone, we'll talk to you and actually understand a little bit more. I think every site is different in terms of what it's going to bring forward, 100%. What the difficulties are, and I think the beauty of, especially where we saw...
Yeah, I was going to say exactly the same thing, which was the beauty that we saw with this was that you guys kind of would get a notification through, this person's interested, you pick up the phone and you have a conversation. And then it's in that conversation where you can then get an idea for where they are in the process, you know, what potentially different products would work for them, what sort of funding models and so on. And obviously, you know, with sort of no obligation, that's the best part, right? Is that it's kind of everyone's working towards trying to get a deliverable site and just making sure that it all makes sense. What would you kind of what would someone expect to have like a conversation about in that initial call? Is it just kind of would you go over the site and kind of what sort of questions would get asked?
Yeah, so we can go straight into cost analysis with them, understanding what they're planning to build out, and we'd look at sort of a residual valuation with the land and try and work to get somewhere sensible and put together a full funder presentation, really.
Yeah, okay, that's great.
And I assume you guys have got a lot of data from projects you've done historically that you can also...
And from you guys.
Well, and that as well. And stuff that's being active in the area and stuff like that. So
yeah, I mean, that's the most important. There's optimism around developers and what a gross development value might be. But if we've got sensible data to back it up, we're building that appraisal and presentation for a funder. It just adds massive weight when we're applying for finance.
Yeah. Cool.
Do you, to be fair, I could blabber on a bit about loads of different questions, but do you want to? Was there some specific points on there that we wanted to get through?
Those, I mean, in terms of like deals losing momentum and stuff like that. I mean, we probably should talk about the main reason that maybe deals do end up losing momentum, because I think there's a stat that is, you know, a lot of projects actually don't end up going to completion. I guess it would be good to know kind of the main things you see from deals actually not getting done or across the line.
Yeah, I think this is a plug for us as well. The value a broker can add. I think everyone is expecting someone else to drive the next step in that project, whether that be your surveyor, the valuer, the funder, the developer himself, his lawyer. But the brokers, our job really is to bring those all together and ensure we're on top of a project with them. So we help project manage alongside the developer as well. But what we see from a finance perspective is uncertainty around schemes that leads to duplication of plans, probably reworking similar schemes. That then leads to delays in professionals. The valuer goes out late. Your legals are instructed late. And then just confidence in the site. If there's lack of clarity from the outset, confidence sort of dwindles, momentum follows.
Yeah, absolutely. Could you talk a little bit about that? Because am I right in understanding that you want your sort of deal and the process to keep momentum, because if you are then borrowing money, there's sort of an interest aspect of it, and the longer the site goes on, the more of a problem that can be. Is that part of why the momentum is also really important and timelines are quite important, because you often lend with a certain view to have it done by a certain date and so on? Could you talk a little bit about that?
Yeah, I suppose it's important. Entering into any development finance facility, they're finite projects that will run us alongside your development appraisal. Whether you're refinancing or selling at the end, there'll be sales periods or refinance periods built in. And the other point is actually you'll only be charged interest on funds that are drawn, so there's no non-utilisation fees at that. But it is a finite period, so if you can't keep up with that build project, that can often cause problems. And we're seeing it throughout the country. Sales periods are dragging. There's products to sort that, and funders will extend, but there's development exit opportunities are high at the moment.
That's such an important point. Just when we talk a lot about the land market, is that the land market is so downstream from the housing market. Houses need to be selling. at kind of like a sort of really efficient rate for then land to be able to come forward and to keep coming forward, because there's a lot of people that have, money and capital in schemes which need to sell before they can then start the next one. And so a lot of what you see in terms of potentially people complaining about the planning system and land not necessarily coming forward as quickly as it has been, and all these sorts of problems, is because especially in the sort of, I would say, end of last year, start of this year, the housing market's been pretty tough, and it's been quite hard to move. So do you kind of see that in the market as well, that if the sort of housing market slows down a bit, then sometimes then less sort of land transactions end up going through and less development happens? Is that?
Yeah, completely. Well, certainly the developers that were in for new facilities 18 months, 24 months ago, we're finding it difficult to get out to that tail end. Just for slow down in sales, really.
I guess couple that with increasing build costs as well. That will have an effect on the financing side. How much are you in contact with the people you lend to throughout the project life cycle? Are you kind of there on hand to?
We'll so quite often the developers that we work with will first come to us for their next drawdown. So we work alongside that QS throughout as well. And so each tranche, development finance, is paid in arrears throughout the progress of the project. So there'll be various touch points that we're with them throughout.
This is FAQs through pure property finance. So a lot of these, we're hoping, Tom, you know the answer.
Usually I've heard this question before.
And I think the good thing about this is hopefully, again, simplifying it a little bit, especially for probably my simple brain to know a few of these things. So I hear the word quantity surveyor. I know a little bit about it, but not really. Just what's their role in the project life cycle? Are they kind of...
So there's two surveyors involved. The QS from the outset that assesses your cost analysis against the valuer's cost analysis, and then really the deliverability of the project. The MS, the monitoring surveyor, will stay in tune throughout the project and manage drawdowns.
And are they involved in sort of every scheme?
No,
it's usually like a certain type of...
there'll be different definitions between different funders. Some will use in-house asset managers, and that can often be cheaper rather than a third-party monitoring surveyor go out. But essentially, they do the same role. Just keep an eye on each drawdown, that the developer's spending the cash on the development itself.
What, not going out buying a Lambo or something?
But so that's their role. They monitor the scheme and keep ensure that everyone's on top cash flow perspective. But that's kind of where we try and bridge that gap as well, because we pride ourselves on the understanding and cash flow of a deal, and can always be that go-between as well. If our developers are more comfortable.
And obviously, my assumption is that you want to be tracking that development, because then if you feel like it's getting off track or something a bit, if they need extra help, if they need some sort of change to the finance arrangement or something like that, that's something where you could then help as well in terms of if there's unforeseen circumstances they've seen, you might need some sort of bridge or something like that. That's the sort of things that you could then also then help with as well, right? But hopefully if you stay on top of the project, you'll know that earlier, so then you can kind of be a bit more proactive about it than potentially reactive. Is that?
Yeah, that is a fair comment. Yeah.
And where do you see like a lot of the costs going on a project from the money that you're financing, supplying? Where's the majority of the costs going in the project? I know there's could be a number of different areas, but what are some of the key bits that you see it needing more in more areas? Does that make sense?
I'm going to pass on that question.
I do. Just throw it. My assumption is that it would be build costs and...
That's what I was thinking.
Mostly, right? But obviously salaries for people, and then build costs could be obviously, your wood.
And it depends on the scheme.
I mean, timber's up 300% since COVID.
Exactly. But that's so a lot of it's like building materials, paying the... labourers to actually build out the site, those bits. I'm guessing that's where... Yeah,
and it's different to different scale of scheme as well. But
is that something
that's a difficult one.
Is that something that you would at all take into account, as if you know that timber costs, for example, skyrocketed? Is that something that obviously that has an impact on build cost? But is that something that when that was happening, you were saying, well, that guy's trying to build a timber barn, right? So absolutely no chance versus the guy that wants to do a sort of Cotswold stone house. Is that something
also
that you...
expensive.
Well, it's also expensive, but might not be. Yeah.
I mean, they're unavoidable because those impacts in inflation can happen post agreement of cost from the outset.
Yeah.
But as you mentioned, if we're staying in contact with the developer throughout, there's different ways of combating these inflated costs and different facilities drawing down extra if there's room to do so.
What is property development finance in the most simple sentence?
It's a specific finance facility for developing or converting property.
Yeah.
The facility will often be drawn down with project progression as opposed to the static value of an asset.
Okay. Yeah. Cool. And then I guess follow up to that is, how's it different from a normal mortgage?
The way I try to say it, a standard mortgage, you look back at an asset value and its income. A development finance, you're looking forward around the deliverability and the exit.
Got you. Okay.
So I think, one's looking backwards and current values, one's looking forwards at the future values and exits.
Yeah.
Is that in the sense of, you also mentioned differences that with a mortgage, you kind of get it as a lump sum. You buy the house or whatever it is with it or so on, and kind of can do it with that. Whilst with the development finance, there's maybe certain, you might sort of get the funding for X amount, but you'd only be able to draw down Y, to achieve a certain goal. And then kind of once you've done that, there's more that's quote unquote unlocked. Is that kind of the way?
Yeah, drawn down in tranches with the progression of that project.
Okay. And so is that pre-agreed as like milestones in sort of like a contract and something like that?
Yeah, it can be. So some will draw down monthly.
Yeah.
Okay. Some will hit milestones.
Fine.
Some will rely on value add to projects, depending on the scale of project.
And is that all stuff that you would provide advice for, or in terms of in the sort of when you're trying to broker the deal and
from the outset?
Yeah, from the outset.
Yeah.
Okay, interesting. Mm-hmm. Fine. Okay.
I suppose this probably could be to you, but probably both. When should a developer start thinking about finance on a site?
Let's start with the expert, and then I can chip in.
As soon as it's deemed viable. I think we try and say finance should form part of this overall strategy.
Yeah.
And it can shape the project as well. It can have massive impacts on the project and overall costs. Yeah. So as soon as that's deemed viable, it should run alongside a planning application, not as a next hurdle.
So if I dug into that a bit, from a viable point of view, let's say I start on Landstack, I do a bit of analysis, I find a cracker of a site, I think it's great, right? It ticks all the boxes for me. I wouldn't necessarily classify that as viable because actually I don't know, I need to speak to the landowner, right? I need to kind of get an agreement in place, understand that they would want to do something. Yeah. So maybe a conversation at that point might be helpful, but you might say, look, you've got to get over a lot more hurdles before we even really start worrying about finance. Yeah. So I'd speak to the landowner, let's say, for example, that, they're interested, right? Maybe I could talk about acquiring the land or something like that, or putting an option on the land. And then obviously I then think, okay, great, maybe talk to a planning consultant or do that bit myself. Is it viable from that point of view? And then as soon as I maybe get a good enough murmurs or sort of agreements on all those points, then great, I'll pick up the phone and have a conversation. Is that kind of what you're thinking about? Or?
Well, I think if the developer deems it viable and he's sensibly looked at appropriate schemes, there's no reason why we can't run different scenarios and build in the finance cost alongside the build costs. So they should sit alongside each other.
So that's super helpful, is that you can, especially if you're, maybe slightly on the more experienced side, you can start thinking about it really quite early.
Absolutely.
And getting in touch with yourselves quite early then gives you a lot of benefits because it gives you a lot of different ways you could potentially approach the scheme.
I think we would probably push that thought as well.
I agree.
Especially on Landstack. Obviously, we can tell you a lot about the viability from a planning perspective. There's also some ways of finding out at that stage about finance and understanding valuations, which you look at the comparables in the area, have an idea of build cost as well, which all things you can do pretty early on, especially from a system like Landstack, which will give you that indication, and then at least you're going to the likes of Tom to go, actually, I've got a little bit of an informed 100%
process
on it. So I think that's what we would probably say from our standpoint.
Do they get a guaranteed lovely Welsh voice like yourself, Tom, all the time, or like who are they going to end up speaking to?
It gets worse actually.
More.
We can go further and further up the valley.
And then, so biggest misconception developers have about development finance is a question we've got. Is there any?
About development finance?
Yeah.
Yeah, I think, and we'd like to drum it home, it's not a yes-no calculation. It's building a full appraisal, relying on experience, credibility of a developer.
Yeah.
You can tweak and go marginally outside of lending guidelines because of a good, assured, confident appraisal.
Mm-hmm.
But yeah, the more prepared a scheme is, the more likely we can bend rules and find the correct pinch point in risk appetite.
Yeah, that seems to be the big point I'm hearing, at least, is like actually being more informed about what you're trying to do is the big thing. Don't just think, oh, I've got a planning application, found it, know very little about it, but I know it's granted and like the look of it, and just going from that point. I think it's getting a broad base of understanding before you actually then take it any further, which I think there's enough out there that you can do that pretty easily and pretty quickly.
Absolutely.
And then just last one is, what's one thing developers could do earlier to improve their chances of getting funded? I think maybe we talked a bit about that, but is there anything?
Engage with a broker as early as possible.
Okay.
Make it part of your strategy. And I'm a big believer of scenario analysis as well. How have they considered cost or time overruns, and building that into scenarios within your development appraisal? It just bleeds confidence into a funder if you're super prepared for if A, B, C happens. I think
So what are the top 3 things people should get in place before they start thinking about development finance?
Your GDV end value comparables, baseline costing, but I'd run some scenario analysis around that for cost overruns as well.
Yeah.
And good professional relationships, fixed price contractors, solicitors, finance brokers.
Perfect.
Yeah, of course.
Get that in there.
Could we do a bit of a follow-up there, which is, because there's a question there I think is quite interesting, at least to me, is fixed cost versus variable, which, how easy is it to do the fixed cost? When we work with lawyers, we find it very difficult to try and get fixed cost.
Yeah.
They especially because what we do is like, this piece of work, and they go, look, it's going to cost this, but it might have overruns, and so then it'll end up being this hourly rate. Like, how is that? Is that easy to do, or like how would you go about doing that? And is it just a relationship thing, or
with the contractor?
Yeah.
So the funder themselves like control and certainty, so they work far better off a fixed price model than the variable costing.
Yeah.
So if you can get a good relationship with the contractor you trust, that you've been recommended, and they can produce a fixed cost scheme for you, it's a far easier step into funding.
So could you give us a bit of an idea about the different forms of development finance?
Yeah, so ground up development finance, if you're building from the ground up.
Yeah.
There's refurbishment finance, if you're converting or refurbing an existing building. That could be change of use, it could be adding to that building as well. They're both structured in the same way that the drawdowns are paid in arrears throughout the progression of a project. And then you can look at bridging finance, so pre-planning options, to acquire sites or buildings prior to work starting.
Could you go into a little bit more detail? So probably a stupid question, but from what's the difference? When do you go from a refurb to a ground up? What would kind of be the different, and what is like the key difference between the two? Are you just looking at the way that the kind of evaluations are done? In terms of the costings and things like that, or what's the main difference between those two?
Well, they're exactly the same. In fact, the residual land or property value will be based off the gross development value.
Yeah. Okay.
And they're paid in arrears as work's completed. But the difference there is, one, you're lending against an initial asset that's land, and the other is there's a structure in place.
Right. Yeah. And so my instinct there is that if you've got a structure in place, generally that could be higher value than potentially land, and so there might be slightly easier to do refurb than.
I think the biggest difference, there's you might have two strategies with that, and you can often lend without the final planning application you're looking at. So we've got funders that will lend against an existing structure with the assumption your planning is going to be delivered. But then if it's not, you've got a plan B to refurb what it currently is.
Fine. Okay, that's
so
interesting.
Perhaps a bit more flexibility, and you mentioned around valuation as well, because you can rely on its current usage.
So for someone getting started, would you say that potentially looking at a refurb versus a ground up is a better starting point because there's maybe slightly easier options if stuff goes wrong?
Quite often the refurbishment and conversions are more complicated than a ground up.
That's fine.
But a natural stepping stone tends to be someone, property investor, running some buy-to-lets, going into some refurb, trying to add value, and then once they're more confident, they go into ground up. But definitely I wouldn't underestimate the complexities around the refurb as well.
I think because we've spoken to a lot of our users and we hear that a lot, that kind of people start by maybe flipping a house. I mean, they'll kind of dip their toe in there. They might progress through, okay, I've done a bit of refurb on a house, so I can I can do that on an office. And people often see the sort of ground up as the sort of end goal, if that makes sense, where they're like, oh, once I've done enough of this, I can get to the ground up. But are you kind of almost saying that actually maybe don't overestimate the ground up or don't underestimate the refurb? Is, they're if you can do one, you can probably do the other.
Don't underestimate the conversion. Don't underestimate the ground up.
No, fair enough. I
was going to ask as well. Obviously, we talked a lot about residential. Do you also do sort of commercial?
Investment mortgages, So we've got a residential arm, commercial arm as well that'll look at both on a regulated and unregulated side, so consumer and investment side, and look at term mortgages as well.
Okay, and then maybe a stupid question, but trying to come from a layman. If I'm looking at doing some form of finance, I know that's probably fairly broad. First sight, what are the costs that I'm looking like that I'd be affected by going into that agreement with the likes of a broker like yourselves? What do I just need to be aware of when I'm going into doing that?
So most brokers will charge a broker fee or a commitment to that broker to carry out initial research. Lenders will charge their own product fees that can often be rolled into a facility as well. And then you've got your professional costs that run alongside that as well, as you would with self-funded schemes as well.
So with the professional costs, can some of the money obviously through the financing be used for the professional costs?
Yeah, and quite often they can be rolled into facilities and be considered as under one umbrella as well.
Okay.
Beauty of obviously Pure as a business is it's not just people who just purely do finance. You've got a lot of different feathers in your cap. So obviously Tom very much more dealt with the finance side, but we've now got Stu here. And Stu obviously knows his finance side, but actually also knows a lot more about deliverability of planning and kind of all the different aspects of that. And I know, Stu, you've done a couple of schemes in your time as well. So it's great to have Stu here. We've got a lot we want to talk about. Where do we want to start, Will?
I think, a main topic here, I think, is looking a bit of the planning side of things. So obviously we talked a lot about financing projects, what they're looking at from I'd argue the later stage of things, but it's trying to understand maybe a little bit about what are the problems that come when you're actually trying to get that planning application through. So sort of early stage to what are issues we're seeing at the minute, BNG, SIL, all these sorts of different things. And then I think it's worth talking about technology and kind of understanding what the impact that would have on the industry as well and speeding things up. So there's a lot we could talk about. I think maybe we start with something Stu was saying earlier, which was obviously at the minute, it's quite a manual process in terms of validating planning applications, and you're reliant on planning officers and things like that. Is that like one of the bigger hurdles you guys see from planning? Yeah,
it is. I think if you rewind 2002, the planning portal was born. It's a great resource for people to use. I can't remember the exact stat, but it's north of 85% of all UK planning applications go through it. So it's a digital platform where people can submit planning. It gives them information on policies. It helps them through the planning process. So it's a great funnel, but the problem is fundamentally it's a resource once it gets out of the funnel.
Yeah.
You've got 500,000 planning applications in a year, and you've got 5,000 planning officers processing them.
Yeah.
It's still a manual process once it comes through the funnel.
Yeah.
So, if you're looking at that, and we've got a target, or the Labour government have got a target of building 1.5 million houses in the next 5 years. And if you look at a strat site, that's a 5-year process.
Yeah, exactly. I mean,
how are we going to achieve it?
100%. I think that's such an important point. We touch on it a lot, which is that the 1.5 million, I mean, look, it's a little bit cloud nine, but equally a lot of people criticise the sort of Labour government for the deliverability over the short term. And, for those numbers, the different changes they've made in policy to take effect, it's not going to be within 6 months or a year of the policies coming into place. It's going to be a bit of a longer term thing. So, it will take time. But equally, what you were saying, like, it's all well and good putting those numbers together, but you need to submit way more planning applications than we are to hit those figures.
Yeah.
And yet we can't process the planning applications that we currently have coming through. What would you say about the difference between maybe sort of validation of planning apps versus, do you see a lot of other slowdowns later on in the process as well, through sort of like committee stages, or like, do you see like Section 106 agreements or anything like that?
We do, and I don't think landowners and developers actually allow for the time. So of how it affects their project, and I think it's something they consider right from the outset, and then factor that into any submitted plans that they're going to do.
Yeah, I think Section 106 is a key point. We've done quite a bit of work recently on that.
It's the unknown, right?
Yes, exactly. And I think really difficult to get hold of figures for what your Section 106 costs are going to be, because it's so variable.
I think that it's kind of the naive thing that you look at the planning system and you look at like the laws, and it says 8 weeks, 12 weeks for a planning application to be decided. There are applications that have been 2 years, right? Just going through the system. So those numbers mean nothing. So then people often measure performance against those, when actually we're just way over that. It's just getting the numbers down to reality first is one of the more important things. What would you say, Stu, on the finance side a bit? Because obviously the problem is, we were talking with Tom a bit earlier, and he was saying that you get finance and it's kind of hopefully you get it alongside planning, but how much of an issue is it that planning takes longer? Does that sometimes kill finance deals? Do you see much of that happening?
Yeah. It does. It's the unknown, and it eats into the margin of the deal, right? So they might have to do a refi at an earlier stage, or a dev exit, because the project's gone on 6 to 12 months longer than it actually should have.
How does so refi is refinance, just for the layman in the room? No, that's all good. How does that work in terms of in the project? So it gets to a certain point where they have to refinance, otherwise
so the initial term loan is coming to an end, so they're going to have to refinance it with another lender, essentially.
And the general mechanism there is that they pay off the first loan with a second loan.
Correct.
And obviously with Tom we were talking a little bit about that, where he was saying sort of 25% gross profit is kind of what you're aiming at as an initial figure, of which to then take your finance costs out of. What generally do you end up with as like an end sort of profit for, if you take the finance and everything else out? Is there like a sort of percentage figure that generally people work off, or is it different deals? And
different deals, different developer. Just larger scale will run on thinner margins than a one-man band. Small developer.
I think just bring it back to the planning officer validating planning applications, speeding that process up. Obviously, there is a discussion about AI. I hesitate to say the word around you because it will just set you off talking about it. But obviously, seen some things in terms of validating householder applications using AI. Where do we think? I mean, surely it's a must that is going to happen in terms of speeding the process up. You've only got so many people.
To. Right?
You have to.
The 5,000 planning officers has been diminishing over the last 5 years. So what are they doing? Recruiting more people? Clearly not.
And then in terms of what goes into those planning applications, I guess a lot of it is potentially boilerplate stuff that they're checking. So I guess it's sort of a question for you, and Stu can chime in, but is that something that you see as being,
So
feasible?
the quick answer is yes. I think one of my concerns is, I think there's so much appetite within government to increase the headroom and the amount of work you have to do on planning applications. So one of my worries is you can do a lot with AI the government will see those efficiencies and they'll go, well, actually, we should be doing more B&G, we should be doing more of this, we should be doing more of that, because we've now got a bit more space to do it.
Yeah.
And as long as then those policies that they bring forward, they need to then think about how does AI do that, as opposed to, get another consultant to do X or Y. So I think, I think it's a bit of inevitable, especially on the smaller end of the scale, that a lot of it will get done. Whether it will be 100% straight away, I think is an obvious no, but there's kind of some real key, obvious initial points which you could probably standardize and do with AI very, very quickly. And then it's a case of then trying to hit the sort of more complex bits.
Yeah.
But I don't know what you think, Stu. I think it's like a necessary thing that, in order to solve the problem, to build the number of houses, to get the number of planning applications through, you probably have to use AI. I don't know if
Without doubt.
Yeah.
I mean, we've implemented it in the business over the last 12 months from our compliance perspective.
Yeah.
So, it's had a fundamental turnaround. So it's a management by exception tool for us now. So if we can do it in an SME, why can't local authorities do it?
Yeah. Well, I think we know the answer to that. But I think that is obviously one of the other concerns, is that obviously local authorities tend to be a lot slower to adopt technology. One of the concerns I have is that there will, the private sector will push this to the limit quite quickly.
Yeah.
And can local authorities keep up? So, they will have to adopt AI, because otherwise the problem will just get worse. There will be more applications that are needed to decide. Do you kind of see that happening? Is that something that you see? Because obviously you've used it. You're starting to use it as well.
AI as a service, definitely.
Yeah.
So,
okay.
It'll be a boilerplate package they'll take off the shelf and they'll just pay to consume on a monthly basis, rather than trying to roll out themselves.
Yeah.
Interesting. I was going to ask, so obviously if, let's say in an ideal world, planning becomes quicker on that lower end, let's say to start with, you're still going to have the difficulties that Tom was talking about, which is you still got to sell the houses at the end of the day.
Yeah.
And that's got to be rolling through for that to happen. So I think it's like definitely it will help when you get more planning, but do we think actually there's also a problem on the demand side of people not being able to afford houses that are being built and things like that? What's the, thought process around that I know we're talking a little bit about planning here, but also there's got to be some sort of demand side reform or something going in place, Help to Buy. I don't know if that's something that would benefit, but I'm just thinking from a finance perspective, that's probably something that would stimulate.
Yeah. Do you guys, when Help to Buy was a thing, was that a big positive? Would you have said?
For the market in general, yes. We didn't see so much of that.
Okay.
But certainly for stimulus of the market.
Yeah. When you say you didn't see so much of that, is that just because this kind of financing was the financing? Or what do you mean by that? If that makes sense?
There was a lot of family offices involved in going into that.
Yeah.
Because larger scale developments.
Yeah, fine. Yeah. I got you. Okay. I was actually going to touch on the putting a deal together point of view. Obviously, one of the things we talked to Tom about was the sort of finance side. But a lot that goes into that is understanding scale, density, sort of like unit mix, all this sort of stuff. What would you suggest for someone who wants to try and put something like that together? Is that something that Pure help with in terms of, if they came to Pure, would they help on, well, what should I build on this site? I've got a piece of land, I can put, some semi-detached houses on it. I could put some terrace. I could put an office. Is that? Give me an idea about sort of what?
Yeah, so we get a mixed bag of appraisals through to us. Yeah. So we'll actually sit down with the developer, depending on their experience in the trade, and then help them build the appraisal to then put that to a funder. The better the appraisal, the more chance it's got of going through funding.
Yeah.
The quicker we engage with the developer and then go to the funder. Yeah. There's a bit of relationship building there, so to make the funder comfortable with the developer's experience. Clearly, with our relationship that we've got moving forward, a lot of that information's provided out of Landstack, which it's a great template for us to populate and then send to the lender. The lenders know that they're getting, if it's a pure proposal, they know what it looks like. It's the same template every single time.
I think that was definitely the important thing for us is obviously we can do a lot of that site discovery, site identification, giving them a lot of the data early on, but it's kind of going to the next stage where it's like actually if both parties were informed on the site they're looking at, we can give a huge amount of the data that you need initially to put that pack together.
Yeah.
So if you're doing a very quick appraisal or just having a look at a site, you can pull that data in, and then both sides can have that discussion about actually, okay, so how does this move forward? How do we package this up? So I think that was the attractive thing for us, is like we can inform people in a way that maybe they haven't been before, and it's frictionless, as the word Joss likes to use, from finding a site to then also speaking to someone, which I think is the really key thing, is like they're actually having a conversation with someone who knows what they're talking about, and it can help them get it across the line. So yeah, I think that was a really important thing.
Does it happen quite often where you might have a repeat developer, so they've got potentially what they built before, and you look at that and you go, actually that could work here, versus someone who's new and then actually needs a little bit more hand holding, and you would say, actually this is what you could do? Do you guys kind of do both sides of that spectrum, where you kind of look at previous performance of one and go, right, that worked, this is what we suggest?
We do, and clearly with the experience with dealing with the lenders and dealing with multiple projects, you kind of get a pretty good idea before if it's even submitted whether it's got legs or not in terms of a project. So. Okay.
And so in terms of that, that's obviously there you're talking more when it's submitted in terms of the planning application, right? So would you one of the things we were talking about earlier was obviously the beauty about the sort of system we're putting together is that you can get in touch with yourselves at kind of any point in that progress to have at least an initial conversation, where you could kind of discuss before you put the application in, just generally speaking, do lenders look at this and think that it's going to have legs or not, and then potentially some advice on actually whether it would work or not from financial viability. Is that the sort of thing that I think from our point of view, we see that as a huge value add that we could provide for people?
Totally. Yeah. So you've got your comparables, you've got your average build cost in the areas, all those types of things. I mean, to have all that information up front, allows you to go through the site selection process a lot quicker, identify something that's actually going to get over the line rather than wasting hours of time.
No, exactly.
And I think now as well, you've got so many different factors to contend with. Obviously, talking about BNG a little bit, obviously the issues that come with BNG, still you could argue that's a bit of a variable cost like we're talking about with Section 106.
I think there is a piece going through government now with respect to dropping BNG on small sites, and I don't think it's been 100% finalised yet, but what was your opinion on that? And have you seen that kill some deals from a finance point of view? Has that been something that you've seen?
We have. I think everyone's still negotiating at this moment in time. It's if you look at some of the land agents out there as well, that they seem to be scratching their heads over it all.
What would you say on that? Because from my interpretation is that the big problem that the government have with potentially the way that they've approached the changes they've made is they've gone massive on supply side. They've said, here's some housing numbers, submit the applications to hit them. But then they've subsequently done quite a bit on tax. They've done quite a bit on new policies, where they're kind of, all of those will eat into a land value, or all of those will basically eat into the value of the site. Have you seen those have quite dramatic impacts on sort of the landscape, and kind of to what extent do you think that needs to change, or what's your opinion?
We have. I mean, we've seen a lot of developers that are just sat on site. Obviously around some of the regulations that we have out there, but you could factor into the supply issue as well at this moment in time. The market, the froth has come off it in the last 12 months. Hopefully some interest rates will be cut this year, so we might see a return to previous sales.
And in terms of start of the year, have you seen things from your end in terms of inquiries into you? Has it kind of been steady with how it's gone over the last year or so, or are you seeing a bit of an uptick? What's kind of the...
November was a bit of a write-off.
Exactly.
I think we all know why. So November was quiet. December's naturally quiet anyway. It seems like the property industry go away for most of it. But certainly inquiry volume over Christmas, early January, and deals done.
And do you feel like anything from the, I think I know the answer to this, but anything from the budget actually helped with what you guys do on the financing side? Or, because I think what we saw was a lot of people almost waiting to make decisions on things.
I think that was the worst thing. Everyone thought it was going to be doomsday. And it wasn't quite as bad. But of course everyone sat on their hands running up to it. So I think it was a bit of a false start really for everyone.
And then you go into Christmas and it's almost... nothing happened, like you said. Things slow down.
And I'd just say it also doesn't give you confidence for the future, because the problem was so many things were discussed that people thought, God, that could be bad, that could be bad, this could be bad. Oh, by the way, we're not doing any of it this time.
Yeah.
Right? That's almost what it felt like to me.
Just kicking the can down the road.
Which is like, okay, fine, but, are we going to have these issues later on? When's it coming?
And I guess the issue with, especially the finance side, potentially is looking, because it looks future. If there's uncertainty, it's like that's going to have an effect on what people are thinking about doing, the deals people are putting together as well. So, yeah, I think it was just interesting from our standpoint as well. We've definitely seen an increase in people looking at land opportunities, getting in touch and doing that. I think our hope is that momentum just continues on, especially into the April budget as well, when hopefully we get more positive news. But yeah,
obviously the main reason why we put this all together is we've come up with a partnership with Pure Property where they can provide brokerage advice and property finance advice through Landstack. The key here is we put a get funding button on Landstack. You can go onto Landstack, click it just at the top of your screen, or if you click on a specific site, you can click the get funding button, and that will put you straight through to one of the members of the Pure Property Finance team who will then hopefully get in touch with you. I'll probably, Stu, you can kind of, I'll hand over to you on that and kind of explain what you guys will do once that happens.
Yeah, so once we receive the information from you guys, we've got a 5-minute SLA to ring the person back. So we'll be in contact, schedule a call, and then go through the requirements for funding in a bit more detail. Clearly, we've got a lot of the information from you guys already, so it saves a lot of the process in terms of time, information gathering. So it's a lot smoother process for us to go through. Once we've got all of that, we'll work with the developer to then build an appraisal. Once the appraisal's been pulled together, we'll then submit that to a short list of funders, depending on what the requirements are. So it'll be best fit for the developer across a number of lenders that they can then pick from.
Yeah. And that's the beauty, and kind of when we spoke to you, what we really liked about the service you provide is it's not just finance black and white. It's actually a little bit of an idea about, okay, understanding what the person's experience is like, suggestions about the best progress forward from where they are with their experience and the specific sites they're looking at. It's kind of like a whole package. It's not just finance and off you go. There's a huge amount of value add there, and that's something that we really thought our users would get a lot out of.
Yeah, there is, and one of the key things is that we're whole of market, so it's not just a small handful of lenders that we can go to. We've got multiple, so we go to the best lender based on the requirements.
Yeah.
I think the great thing is you can do it all free of charge.
Yes, exactly. So the beauty is this is all obviously, like Will said, free of charge through Landstack Lite.
Yeah,
so anybody can go onto Landstack Lite, they can have a look at the site, and then obviously click that get funding button and get in touch with someone really, really quickly. And that's the beauty of what we're doing here, is we're hopefully trying to bring that kind of funding part forward in the development process, so people really consider it at the right time, not too late on in the process.
And I think that's how we definitely see things through Landstack, is obviously everything's done at that early stage, understanding constraints, policy, and now you can actually start to understand the finance part, which is kind of I guess what we've talked about is kind of the missing piece of, for a lot of developers on the smaller end, actually getting things across the line. So it will be very much, a seamless way of identifying and then also pushing the site forward for planning and onwards. So So this is a guess the plot with Stu.
Yeah.
Do you want to explain a little bit about the?
So this is something there is no prize other than the glory of getting the correct answer. But
I think I'm.
No, don't go there.
I'm
Score
3 out
wise,
of 3, and I think you're 2 out of 3.
This is not I'm not great at this, but the aim here is that we'll get given a couple of different celebrities, 3 I think, and then obviously a picture of a house, and we've got to kind of guess whose house it is. So without further ado, Will, do you want to crack on?
I will click through. Okay. So that is the house, and then 3 celebs: Simon Cowell, Deborah Meaden, and Alan Sugar. And I've been told that it's financial celebs.
Simon Cowell's the most dubious there.
Yeah.
I mean, look, initial reaction, I think, is that too small for Alan Sugar?
We do usually base this off size of property.
We'll get some hints as well, by the way. So I guess we've got to sort of think initial.
So the house is massive. bloody massive.
The balcony at the end looks
You know
a
what?
bit...
That's a good shout. Actually, I didn't see it, but you're
I
right.
didn't notice that. And you don't
a
need
bit
that many
cheesy,
windows
isn't it?
as
Yeah.
well. Like that is a lot of windows.
Actually, I said too big for Alan Sugar, but Simon Cowell would also have an absolutely massive one, wouldn't he?
Yeah.
Bit of land around it. Not a huge. We're not used. We're
Sorry,
used
I
to a
go
lot
the
of land.
size, yeah. But I don't know. Maybe that is quite a big
Sugar,
house.
Lord Sugar.
Yeah, it's not like we're looking
Lord
at a
Sugar.
semi-detached two-bed
Lord
here.
Sugar.
It
Yeah,
is
it likes to
a
be
mansion.
Yeah.
So yeah.
The
Did you say-
balcony, it's awful.
Did you say Tudor? Do you think Tudor?
Mock Tudor.
Mock Tudor.
Okay,
Yeah,
okay.
Mock Tudor.
Yeah, red brick. Look, I'm going with.
We're going to go off the bat and have a bit of a
Yeah,
guess.
I'm going to like initial.
Where do we think
I'm,
that is? Firstly, where do you
Oh,
think?
I've
in
got
the-
God knows somewhere London, outside rural
Essex.
London. Yeah, I was thinking the same thing.
Well, it's got surely
The
that's
balcony.
Yeah.
Okay, yeah,
we've got some expertise.
we
now.
do. Yeah.
So Essex, who we think? I'm thinking Alan Sugar first.
Sugar.
Yeah.
I was
yeah,
thinking
okay.
the same thing. I was going to go out and Sugar.
Okay, we all go
Yeah.
in our
Yeah,
initial
yeah,
thing.
okay.
Okay, and then so get some clues. Clue 1 is
Doctor Who?
Doctor Who,
TARDIS.
I believe. Yeah.
Hang on, that's a rogue one.
Well, that's stumped me a little bit. I won't lie. Is
What
one
on earth? There's no chance that
either super
No.
fan? One of them's got to be a super fan of Doctor Who
yeah.
Can't be anything else. Or they may
They've
have
made a
appeared.
guest appearance. Yeah, I was
in
thinking that.
Doctor Who.
I
Okay.
would put surely Alan Sugar's got the biggest chance of making a guest appearance. Only reason is because this is the most random thing ever, but BBC isn't The Apprentice on BBC?
It is.
Yeah, it is.
Whereas Simon Cowell's
It's
ITV.
ITV.
Yeah.
Deb Marine at BBC.
Yeah,
Yeah,
so
Dragon.
one of those two.
Yeah.
And I could see, I really couldn't see Alan being a.
Dalek.
Can you imagine?
I can't see it.
You're fired.
Yeah, I can't see
I'm
it.
not sure that one would.
Yeah. Okay, so I'm thinking super fan. We're going with
I'm sticking Alan Sugar, by the way.
Sugar,
but
yeah,
yeah,
Sugar.
yeah. I still think there could be a super fan or something.
fine. Second clue.
What?
Oh,
I can't even see that.
It's a car. It's a car aerial. It's got to be.
What on
Lord Sugar.
earth? Hang on. Okay, like if you're thinking like
Because he was into
He was into, like,
phones. That's how he made his money.
he made his
Yeah.
money that way, that's what I was thinking. But that is like the most.
I'm putting to but he also sold stuff out the back of his van.
He
That's
did.
what he always bangs on about in The
Yeah.
Apprentice. That's
Okay.
how he made his.
Homemade it.
So maybe he,
Import, export.
yeah,
Yeah.
maybe he did it via TV aerials. I mean, my TV aerial is off my car,
Well,
so
Got nicked.
I got nicked. There's a lot of value in a
There is, yeah.
in
That's
a
how he makes so
car
much money.
aerial.
Okay, yeah, nicked.
So I'm thinking maybe aligned something with that. And
Still
I think
Sugar.
we can rule out Simon Cowell, surely. I don't think it's him. And it doesn't seem like a Deborah Meaden thing. How does she make her money? Do you know?
No. And she lives in the southwest, I think.
So come on, I
Right
think
next
we've got
to
it.
Stu,
Lock him
in the
in.
southwest.
Lock him in, Alan Sugar.
Do we get a third clue?
I think we do get a third clue. No, we don't get a third clue. Okay, so we don't know yet. I haven't clicked the button, but I think we're all going Alan Sugar.
Alan Sugar. Yeah.
Final answer.
Boom.
We're right. I'd like
We're experts at this. I feel like we're getting good.
That's like the first one you got right.
can you give us a bit of an explanation as to like what the two clues were?
Yeah.
Were we far away?
So apparently it's like public information that Alan Sugar is a massive Doctor Who fan.
Okay, so you were right lines.
There
You
you go.
said, yeah.
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 And
Yeah.
also you were completely spot on with the aerials, the car aerials.
Oh,
He
really?
started selling those out of his van that he bought for
Car
£50.
aerials, 50 quid. Okay,
There you
nice
go.
knowledge. Yeah.
4 out of 4.
Yeah. Okay.
That was good.
Yeah, you've
Nothing
been-
to do with the balcony.
No.
Well, maybe,
But
I
I will say the balcony though you were right about probably. It's
Yeah.
probably in Essex.
Yeah.
And that's I
It
think
does
nailed
look.
that.
It does
Just-
look very Essex.
Yeah.
I think
Yeah.
it is. I think you were actually
Yeah.
spot on.
I honestly think we were pretty good on that.
To be honest,
That was a
maybe
good
you,
one.
maybe you two should do this from now on because I'm a little help on
That was a good one. Yeah.
We just got one.
No, you've got two, you've got one more.
I've
Okay,
got one
right.
more. God, okay.
more.
We've
Having
warmed up
fun
now. Right. Here we go again.
Guess
Guess the plot.
Guess the plot. Keeping on the size theme, smaller. Right, we're not a
Yeah.
Sir Alan Sugar here. You know, we're looking at a couple bed, like maybe 3 or 4 beds, maybe a bit more, but it's smaller.
Bit of land.
Modest celebrity
modest.
house.
Modest celebrity house.
Yeah.
Yeah. Okay. And then privacy because of the massive.
Big
Hedges.
hedges. That's a good point, actually.
But they're celebs, so you.
Yeah.
Close to the road.
It is,
Yeah.
yeah. Okay.
And
And
the
the
house
neighbour.
next door.
Yeah, and
exactly.
potentially either a smallish garden or paddock at the back. I'm
Right,
thinking horses.
let's get
anyway.
the celebs out. Oh no, yeah,
no, Stu, I think you know. No way. No.
and
So Denise Coates is Bet365. Yeah.
I would say interesting.
That's crazy, that. So I would have said...
Small house for all.
I would
three.
have said none of them. Yeah.
So James Dyson, Richard Branson, and Denise Coates. I feel I spoke to you before a little bit about James Dyson because he was flying over. You were playing cricket,
Helicopter.
and he flew over in his. Well, we think. Well, it was said he flew over in his helicopter.
Where we played cricket.
Yeah. And that is
obviously
Close to Badminton.
Yeah.
It is in, the name escapes me, that is so
that
bad.
area. But he had a chopper.
I was going to say, and you
Yeah.
do not see a helipad there, do you?
No.
Yeah, exactly.
So
And his house is about 90,000 square feet, so I don't think it's...
Which you probably rule him out.
so we can rule him out.
Richard Branson lives on an island.
Yeah,
He does, but he is the largest landowner in the UK, so that might be
Okay,
a
you
curveball
yeah.
that might be a house on his land.
So
What with Dyson, you mean?
well, clearly all three of them can't live in there.
No, I know.
But with Dyson,
It's a large
I think
landowner.
I think from my point of view, Denise Coates is the one here because it's like the one I know least about.
And it's
if that
low
makes
key.
sense. And low key,
low
and she
key,
is quite
under
low
the
key.
radar.
Yeah.
Whereas
Yeah.
the other two are a bit.
The
Okay.
opposite.
So I think our initial one is Denise.
Yeah,
Is
yeah,
our
yeah.
call. Right.
Yeah.
Clues are hot air balloon.
Oh, Branson,
Yeah, I thought that as
What?
soon as I saw
Why
High
is
Balloon,
that?
I thought Branson.
because he
He did a big.
went onto the edge of space, didn't he? He went to he's the highest balloon flight ever.
Okay.
Interesting because well, a bit rogue, but
Was it Challenger balloon?
Right.
Maybe, I
Might
wasn't.
be,
I'm not.
don't know. You probably weren't even born at that stage.
Okay,
I was thinking maybe one of them goes around in a hot air balloon.
it can't be.
Get from place
It
to
can't be
place.
James Dyson, can it? Unless this is like proper curveball family home sort of thing. But
Yeah.
go on, next one.
I think maybe Denise.
They're
gets-
laughing, so there's got to be something.
Yeah. I think Denise gets from place to place via a hot air balloon. That's what I think. Number 2.
Rolling Stone, is that Rolling Stones?
Rolling Stones.
Okay, it's got to be Branson because he had a record label, didn't he?
Virgin.
Yeah, and I don't know if
That's
he
how
had
he
the
made his
Stones,
money.
but
That's how he made his money
yeah.
initially. Yeah.
So that's my initial reaction is that I don't know what would connect Stones to the other two. But the thing is, I don't think he had the Stones on his label, did he? It was,
Don't think so.
no.
I think they
Okay.
were pre-Virgin.
Yeah.
Hold on. It wasn't a label. It was record shops.
Okay. I thought it was
how we used to listen to music.
right
Okay.
back in the day.
I think that's
Back
the-
in the day, record shop, Virgin Megastores.
right. Okay.
That's the only link I reckon we can
I'm
make.
feeling so old now.
Yeah, I was about to say.
Clear what I'm talking about.
But I think, the only link we can make is that. Do you
It's a
think?
pretty loose one.
It is loose, isn't it? But I've got nothing else.
I've got nothing. I'm trying to think for Denise.
The
and Rolling Stones.
balloon certainly for Branson.
Yeah.
I don't know what the Rolling Stones has that. How
Maybe
that
like-
ties. But it just doesn't
Because she
seem.
makes so much money from Bet365. Maybe she paid the Rolling Stones to do a concert at her house.
Oh yeah. Who's she married to?
How is she
Still,
tied to the
she's-
balloon though?
She gets around via hot air balloon.
I'm Richard Branson. He's killed it for me there.
I'm just trying. I'm trying.
Richard Branson.
So we're going Branson.
Branson. Final answer.
Here we go.
Yeah.
Nailed it.
There we
Stu's
go.
been.
Yeah, it's great help. You can come back,
Yeah.
Stu, for that.
Yeah.
That's
2 out of 2.
2 out of 2. Kaylee, you're gonna have to try harder on that.
Yeah, I didn't expect you to know this, but.
Honestly, I think if Stu wasn't here, yeah.
Yeah, Richard Branson knows that.
Was it Challenger balloon?
It was, yeah, so he flew with Pier Lindstrand,
Yeah.
and they were the first people to cross the Atlantic Ocean in a hot air balloon in 1987.
There you go.
Oh, right.
I thought that was pretty cool.
Yeah.
And yeah, the second clue, he signed notable artists such as Sex Pistols, Culture Club, the Rolling Stones,
He did.
and Genesis to the Virgin Records label.
Oh, so he
Oh,
did have
so
a
it
record
was, okay,
label.
okay.
Yeah. There you go.
Yeah.
That'll get people. Yeah, that's good. That was good. Thanks everyone for listening today. We're planning to do a lot more of these. So comment below who you'd like to see next or maybe what topics you'd like us to cover. Like, subscribe, and remember to check out landstack.co.uk and you can try it out for free today.